What is going on, everybody? This is Jack with the Trading Tribe, and today I'm really excited to introduce futures and explain some of the benefits to trading futures. I think this is a market that many traders don't even know about or haven't tested, and I really do think these are built for traders, and these are one of the best instruments to get into as either a new or a trader that does know what he's doing. I think this is something you can always add to your arsenal. If you could, before we get into it today, please like and subscribe on this video so that I can continue making more of these each week and we can get started. So on my screen, this is the natural gas future. This is an instrument that I trade on a daily basis. And to introduce futures, really how you should think about futures are basically just like a stock, where a stock mimics a share of a company or tracks a share of a company. A future tracks the price of a market. So there is the ES as a future, which is the S&P 500. There is the NQ or the NASDAQ, which is tracking the stock market in the US. So both of those are tracking the value of the market in total for those two instruments. There are hundreds of futures available, and really any market you can think of has a future. So there is a corn future, a gold's future, a silver's future, oil, gas, the list goes on and on. So really most markets that are traded in the world have an overall future. One of the benefits to that is it's the purest trading you can do. Futures were built for speculating and for futures, because in every market there are obviously people that think the market's going to go up and people that think the market is going to go down. So these were exactly what futures were built for. They were originally built for hedging, so that if you were buying corn or if you were buying gold, you could hedge your bet and short gold or buy gold in the future months to try and get a price advantage of buying that individual commodity. So with that being said, futures has a lot of benefits here. They do have fees, but they do not apply to the PDT rule. So there's a couple pros and cons right away. The fee is pretty minimal. It depends on the broker, but with TD Ameritrade, I believe it is about $3 per trade. So every round trip in and out basically is about $6, $5 to $6, somewhere in that area. And I know there's brokers that are pretty close to zero, like Tradevate, that are like 70 cents per side. So from a futures standpoint, it is important to know that it's not free like a stock, but it is also not applying to the PDT rule. So we've gone over this in the channel already, but if you are a stock trader and have under $25,000 in your trading account, you can only take 3 round-trip trades every 5 days in the market. That's obviously a huge limitation, especially if you're a beginner trader. And futures, since it's its own market, has created a rule where it does not apply to PDT. So that is a huge advantage, because if you have a small account and maybe just have a couple thousand in the market, you can still trade something like natural gas every day. And that is why I loved it. When I got started, I did have a small account, and it was one of the huge advantages because I was still able to trade and still able to actively get in and out of the market every day. The way futures work is they do not have a dollar value. They have a tick value. So every future works a little bit differently. But if we do this drop down in TD Ameritrade and go over to the futures section, you will see a huge list of futures, but in our case, natural gas, right? It moves in 0.001 tick values. So instead of like the dollar price, if you think of like a Tesla at like the $900 mark, Tesla is valued in dollars. So if you want to buy one share of Tesla, it depends on the price of Tesla, but you have a certain dollar value to pay to get into a trade for Tesla. Whereas futures doesn't quite work that way, right? Futures, you are trading a contract, in this case for either betting on natural gas to go up, so buying natural gas as contract, or shorting natural gas's contract, which is exactly like shorting a stock. If you want natural gas to go down, you would then short, and the shorting works the exact same way as it does in the stock market. The cool thing about futures is it's extremely simplified. So instead of having to calculate percentages or how to calculate how many shares you need, all of that can be pretty complex, especially when you're trading in minutes and making super quick decisions. Knowing how many shares you can buy, where your risk level is going to be, and where your take profit is going to be can actually be a pretty tricky task at that quick of a pace. Whereas futures, I typically just trade a few contracts, 1 to 3, typically depending on the setup. So the actual share size is very easy and manageable because you are only trading in like increments of 1. So it's pretty easy to track. And then in terms of figuring out your risk and your profit, it's extremely easy. So like I said, it moves in ticks. So every 0.001 is a tick. And if we do that drop down one more time, every tick for natural gas is $10. So in this case, right, when gas pulled back down on this day, I actually did get in on one of these tests. But if we click with the drawing tool in Thinkorswim, we can use this stretcher to basically figure out the ticks in a certain move. So in this case, let's just say we took this long setup and we got out right here. In this rectangle that shows up in the middle, that second value from the bottom, that 0.066 is the amount of ticks that we got in that trade, for example. So if we bought one contract of natural gas right around 6:30 and sold right around 7:15, which is this trade we have highlighted, we would make 66 times 10 on this one trade if we have one contract. So you can see it is a super lucrative industry, especially if you're nailing your entries and you're going with the trend. It offers about $700 of moving in less than an hour. And this on a daily basis is exactly what I do in my active account. I am trading typically multiple futures, but natural gas is my strength and my kind of forte, if you will. Same thing with shorting, right? If you shorted, instead of buying here, you would sell here, and then to cover, you would buy to get out. So it's really just flipping the buying process on its head, and that's how you would short the future itself. And then everything else works the exact same. If we shorted here and our target was maybe down here, that would be a $500 move in this case, or 51 times 10. It is important to note that every future has a different tick value and a different tick value. So if we go into like the Canadian dollar is something you can trade in the futures market. It is moving in 4 decimal places, and each move is $1. So a little bit different there, but important to note because every future works a little tiny bit differently. Another cool thing about futures is there's essentially 2 versions of a future. There is the standard contract, which is what we are looking at right here, where we see just natural gas /NG, and then F22 basically means we are trading next month's future. So F stands for January. Since we are in December, we are trading that front month or that next month in the future. And then that next month is in 2022. So that's why we see a 22 right there. But in this case, if you did have a super small account and did not want to trade in increments of $10, maybe that's too much risk for you at the beginning, there is a micros contract, which is 1/4 of the size. So buying a contract costs 1/4 of the amount as natural gas, and the ticks are 1/4. So instead of one contract moving in increments of $10, it would move in increments of $2.50. So that gives another really good set of flexibility, especially as a beginner. And that is another reason why I really love futures. And then kind of lastly, and really the biggest benefit in terms of day trading futures, our futures are almost open 24/5. So during the week, They are open, and there is little maintenance periods each day where they close down for about an hour in the afternoon. But the cool thing about it is when you wake up, right, you have a lot of good context because since the night before, the future has been moving. So you can get a really good gauge on what price is doing. In today's instance, right, it is a pretty clear uptrend. So you wake up around 6 or whenever you get up in your time zone. I typically get up around 6, and you have about 8 hours of price movement to look at and to mark up for your trading day, which is super different than stocks. Stocks are only open during trading hours, and trading pre-market or after-market hours is super risky because the volume just isn't there. Whereas futures, you can see even at night, moved really cleanly and kept a trend really the entire day. So even towards 10 o'clock, it's still respecting our main level and it's still continuing that uptrend. So another really good thing I like about futures is trading them are a lot safer in the instance because you do have more context each day. So with that being said, that is a quick rundown as to why I like futures, why I trade futures, and why I recommend beginners getting started on futures. Thank you so much for tuning in to today's session, and we will see you next time.